everybody, welcome to our second webinar for 2023. Very excited to see you here to participate in this webinar. And for those of you who have attended our first webinar, it's great to see you again as well. And do know that the comment section is open up. Feel free to ask any questions, and what we'll do towards the end of our every webinar is that we'll tabulate all the questions that our participants have asked, and we'll tabulate with the answers, and then we'll email it to everybody that signed up for this webinar. So that's how we're going to do the Q&A segment. And for today, the topic today is to talk about new launches and whether are there still any opportunities in the year 2023. So these are the three main topics that we want to dive into together with you today. So the first thing is we want to make sense of today's new launch pricing. And second, we want to see what are some of the most anticipated new launches in the year 2023. And last but not least, we want to see how we can minimize risk by using the PLB HAPC method. And then later on, we'll share with you what are the key components of using this method to decipher some of the new launch pricing and to see how you can invest into new launches if you are really thinking about investing into a new launch project in the year 2023. A bit of disclaimer before we kick out on today's webinar is that do note that property investment is an important decision that you have to make, and we recommend that you only make that decision after you have went through a financial prudency check as well as a stress test and sustainability test after you have ascertained whether does this investment suit into your current portfolio. So do take note that for today's webinar content, we're sharing from a knowledge sharing perspective, and we want to talk about new launches in specification on the movement that he has went through ever since 2020 pandemic season all the way until today. In terms of the percentage change on a quarter-to-quarter basis, as you can see, based on our PLB research team, is that the trending is still on an upward trending momentum. And in our last webinar that we have completed on the 15th of February 2023, if you have participated with us, we also talk about some of the key things to note in terms of our thought process for the latest increment in buyer stamp duty. And we went into a deep dive on the next shift that might happen this year in the real estate market on the macro perspective. We then went into a micro perspective as well to talk about the possibility of the movement, because there are some possibilities that moving into 2024 that Fed might reduce its interest rate, and then what should we prepare ourselves if, let's say, we are still waiting on the sidelines, and even if let's say we have an existing portfolio, should we even take action as well based on our current season in our property investment journey? So buyer stamp duty, of course, was one of the hot news that happened in February 2023. We also deep dive on our latest NOTG Banter series, and if you have not seen the episode, please head on to our Property Brothers YouTube channel, where we had a very fun and interesting session talking about the latest budget implementation, especially diving into the buyer stamp duty as well as some of the latest grants given to HDB home buyers. And we talked in depth during the last webinar on what type of properties to invest into, and I think it's very important to do a quick recap because we also dive in a little bit on the two types of advice that usually home buyers will hear in the market, because most of the time as a home buyer we usually will hear on when to invest, and usually people will tell us to invest right now, and people will always tell us to look at new launches as a more favorable kind of property. So is that true? Because the usual one-sided advice is that only buy new launches because the resale market can't really see that kind of capital appreciation. But is that even true to a certain extent? And then we talk about in the first webinar is that it's not really about new launch or resale as a product category. It's about selecting the right property with the correct fundamentals and entry pricing. So some new launches, they do see appreciation. Some new launches do see stagnation. Resale properties as well. Some resale properties, if you invest correctly, you see appreciation in 3 to 5 years' time. Some resale properties, you still see stagnation even after 10 years' time. And the core investment fundamental principle is that all of us, when we buy into properties, whether we want to buy for own stay or want to buy for investment, we want to see our property appreciate. And we want to see good ROI on our property investment because we are fighting against time. And by timing the market, we are also fighting against time. By buying a property, we want to make sure that the longevity period that we're staying in the property, whether is it 3, 5, 8 or 10 years, hopefully we want to see the property that we own appreciate through time so that we have the opportunity to upgrade to another property, a bigger property, or we can even do a lot of flexible equity kind of play with our existing property as well. So all of us want to see returns, and the next two webinars that we're diving into in March is that the next immediate webinar we'll be talking about making the right move, and we will deep dive into a comprehensive approach on upgrading from HDB to a condo property in the year 2023 to 2024. What are some of the key things that if you fall into this spectrum, what should you take note, and what should be some of the key strategies that you can undertake? And then, I think for landed lovers, you're going to love this particular webinar in March as well, because we will be talking about landed property investment. Should you rebuild? Should you go for a property that needs A&A, or should you buy a brand new property from a developer in the year 2023? Now, this year is going to be very exciting because in totality, this is currently the second webinar. We're going to have 23 webinars all together, including seminars as well. So we're going to have some physical seminars, which one of the seminar will be a property summit that we'll be holding. The final date will be released soon once we have finalized all the details and venue. And one other seminar we'll be holding as well will be a landed property seminar. So I think that seminar is going to be very exciting for landed home buyers as well, because what we're going to do is that we're going to showcase a lot of the landed developments in Singapore for the next 1 to 2 years. There's going to TOP and going to be completed by some of the landed developers. And I think you are very interested in landed properties. That will be a key landed summit that you want to attend. Now, a quick brief about our style of our webinars is that our webinars is a little bit different from some of the webinars that you see in the market. Because if you have attended our first webinar of 2023, you will realize that at the end of the webinar, there are no products pushed, in the sense that we do not pivot the webinar towards a particular new launch development or towards a particular set of properties that we are currently selling. Because the key objective that we want to have for our webinar participant is that we want to have a more unbiased approach. We want to use our webinars as a base for knowledge and research sharing from our research, as well as our deep dive opinions about the current market situation. And thus, we do not position any products at the end of the webinar. The only thing that we pivot towards the end of our webinar is that if you ever need a consult session on an unbiased approach basis based on your current season in property investment and your current portfolio, you need our consultation team, you want to have physical meetup at our office, that is the only service that we will provide for you. And in the event, if we do have any form of collaboration with any developers to position any of the properties that we think will be very viable for our audience, then we will mention the project name in advance beforehand. And thus you will see the webinar title having that project that we will be collaborating with the developer. And even if in this kind of collaboration with developers, we also come from a research and review approach. We also analyze in specification on the site plan, as well as the units that the developers are selling. And thus, this will be the basis that we will be conducting our webinars. Now, there'll be some freebies and tools at the end of today's webinar, so do stay tuned with us until the end, because we'll be giving out this very interesting PLB Reset PSF Calculator for 99 years properties. Later, I'll share with you what this calculator is good for. And then we're also going to have 2 sets of research that will be available for download towards the end of the webinar. So do stay tuned with us until the end, because the QR code will be provided only until the end of today's webinar. And these 2 research are basically tabulated from our research team. So we're going to have the current new launches based on the project's lowest PSF units in OCR, RCR, and CCR, as well as on the quantum basis, and 2 different sets of PDFs for you to download so that you can do a little bit more deep dive on your own time and availability. Now, a quick recap on some of the latest news is that home prices are still strong currently in this quarter, and the whole of 2022, we've seen an uptick of 8.4%. So the year of 2022 has been the year of the black swan, because stock market has crashed, cryptocurrency market has crashed. Of course, there's a lot of things that's happened, 7 rounds of rate hikes. And when we look at 2023, it seems that there was a slight uptick in terms of the US stock market. So coupled with, of course, a couple of different kinds of news that causes dilemma among home buyers, is that over 5,000 new private residential units are set to launch in first half of 2023. There's also large turnout at some of the new launches that's been launched as well. And we're still in a high interest rate environment. Of course, at the point of recording right now, in Q1 2023, there seemed to be a little bit of adjustment in terms of interest rate, because in latest round, for example, like some of the rates package from OCBC is that they're starting to offer like 3.88% compared to like 4.2% just a couple of months ago. So is this in conjunction with the Fed's projection for the next 3 years? Because there's already been projection that rates are going to taper after Fed pivot this year, because inflation figures seems to be more in check and aligned this year already. So if interest rates were to come down next year, and naturally when US interest rates taper off, our mortgage interest rate in Singapore will definitely taper as well. So what is going to happen to our property prices when interest rates starts to come down? So if you have not seen some of our key analyses, do head back to our Property Brothers YouTube channel, because in our Nuggets of the Go episode 1 and 2, we did talk about some of the key implications and ripple effects on interest rates tapering off next year. So a quick introduction of myself, if this is your first time joining our webinar, is that my name is Melvin Lim. I'm the co-founder and CEO of Property Lim Brothers Media, as well as PLB Realty. This is our current team. We have close to about 118 fabulous teammates that are in 2 different companies, but we all work under the same Property Lim Brothers brand. So our team is formed of around 50 over people from our Property Lim Brothers Media and HQ team, and 50 over people in our PLB Realty team. And in PLB Realty, they are all full-time inside sales team consultants. For myself, I've been in real estate for 16 years. Formerly, my first career was, if you have seen a little bit of our story, was that my back brief was I was a prison officer together with my business partner Adrian, and then when we came off the prison service, serving Ministry of Home Affairs, we came into real estate together 16 years back. Currently, I run 2 companies under the Property Lim Brothers brand, and personally, I've analysed and filmed over 926 home tours in over the last 5 years, and out of the 1,694 videos that we have on our PLB channel. And I myself am a property investor. I love to analyze properties, and I still love it until today, which is why I still appear in a lot of our home tours. So last year, during 9th night, September 9th, we came out of our former company, and of course, we started our PLB Realty arm. And of course, I want to thank you for the support that you have given us over the years. This is our Property Lim Brothers YouTube channel. We produce content on a daily basis. Till date, we have about 1,700 plus videos already. And not only do we produce home tour contents, and this home tour contents, before I dive into other contents, that these home tours are all actual properties for sale. And of course, we do a lot of analysis for new launches. We talk about the market. We do interviews as well. And over the last 12 months, we have deep dived into a lot of motion graphics in order to bring out the pros and cons of every property. And of course, our objective is that at the comfort of your own home and on the comfort of your mobile device, you'll be able to look at a lot of different properties from a buyer's standpoint. And even as a home seller, every time when we want to sell our home, we also need to buy a replacement home. This allows both home sellers and buyers to benefit greatly with our content. And we love to talk about methodology, facts, analysis, and numbers. And we love to position each property based on their key numbers and statistics. And that's the reason why we have a lot of all these motion graphics within our home tours, and we don't like to just showcase the interior of every home. We like to bring out the facts and figures and then analyze it together for our audience. Now, some of the motion graphics that you've seen will look something like this, and do head over to our channel to watch some of our home tours if you want to understand a little bit more. Over the past 6 months, we have also dived deep into 3D architecture visualization, because we recognize the fact that everybody loves and prefer certain kinds of homes towards their own preference and needs. So with 3D visualization, this is something that we can do for our home sellers as well as our home buyers. Now, we're also very happy to look at the past 24 months of statistics and performance of our team, is that we have managed to achieve a 91 days median speed to sell a home. And as well as 62% of our PLB home sellers, they actually sell better and higher. So just a showcase of our latest technology is that with our 3D architecture visualization, we're able to showcase more possibilities inside our home tours. So we take the actual floor plan, we take the actual video, and of course we whiff all these possibilities into the home itself. So that as a home buyer, you get to see different kinds of perspective. You get to see different kinds of possibilities that you can do in the event if you want to buy this home. So this is just an example of a penthouse unit that we've recently sold for a client, and this is a very beautiful, huge duplex penthouse. And of course, we want to see what we can do with the roof terrace in terms of having that visualization module. Also, this is an example of a penthouse that we're currently selling at Casa Rosa. We just want to showcase, you know, when you purchase a penthouse with roof terrace, what can you potentially do with the kind of roof terrace space that you can have. So with this kind of technology, we can then, at the comfort of everybody's home, tell the story a little bit better. This is an example of what we have done recently for our home seller that's trying to sell a property that has not fully completed yet, and this is what we call a sub-sale unit. And with our technology, we are also able to help home sellers with sub-sale properties. Now, this is an example of a home that we have recently sold. It's a landed property, very beautifully built, and of course, the key objective of this particular showcase was to see how we can utilize the roof terrace to a better extent. Of course, this is an example of the 3D that we have done as well. And recently, we have very proudly helped a homeowner to find a right buyer for this very unique landed property. So most of the time, when properties are being showcased in the market, I think a lot of realtors, they like to avoid talking about very challenging kind of layouts. But for us, we do things a little bit differently. We talk about the obstacle up front so that we can find the right buyer that appreciates this kind of home. So for this landed home, basically it has a long driveway. But in our home tour, we like to talk about this long driveway and how we can offer a creative solution and perspective to it. And of course, if a buyer finds that the long driveway is not for them, they will not come for the viewing. And buyers would show up at the viewing. They've already seen this home tour 2 to 3 rounds, and then this creates a more genuine viewing experience because we showcase the long driveway right from the start and what potential buyers can do with this long driveway in the event if they do buy it. So let's come back to today's topic. Now, does it make sense to buy a new launch today at today's new launch pricing? And if you're here today, probably you might be asking yourself these few questions. Maybe you're asking yourself, what choices do I have this year? What is the best new launch that I should look at in the year 2023? Do I only see appreciation by buying a new launch? Should I explore resale as well? And then we also want to talk about who and why are people buying new launches even today. So I think when we look at the overall transactions volume in Singapore, 50% of most of monthly transactions that happens on the private property market, 50% tends to belong to the new launch market, and around 50% belongs to the resale market. So from that kind of very cohesive and consistent behavior in transaction volume, we can see that in Singapore, there's a very healthy demand when it comes to new projects versus resale projects. New projects, naturally, you have to wait for 3 to 4 years for completion. And of course, what you get to enjoy is progressive payment. Resale development are usually for homeowners that wants to see the brick and mortar, the actual size and layout and facing. They want something that has immediate occupation. They want something that they can buy and renovate themselves. And they don't want to wait 3 to 4 years in the sideline, either by renting or staying with parents. So we believe in PLB that by understanding macro, it helps us to be a better investor, because we believe in this 3-step approach is to firstly understand the macro context of every particular season. So for example, let's say this year is the year that you want to enter into the property market. Look at the macro first. And then after understanding the macro, that gives you confidence to decide whether should I enter into the market. And if you think you're confident to enter into the market, then look at the micro factors. There's no point looking at micro factors if you don't understand the macro factors. And after understanding the micro factors, then we move into the selection factor. So it's always a 3-pronged approach to ascertain the correct strategy to enter into a particular property, be it new launch or resale. And this particular chart, we'll talk about it a couple of times. We are currently in the latest season of the latest 5 years benchmark pricing. We cannot go back to the previous 5 years. Now, this chart allows us basically from a standpoint, and let me just pause this before I continue moving. This chart actually shows us the amount of properties that will be completed. And this means that it shows the amount of properties that developers have to hand over to the first-hand buyers. So for this year, there are about 19,000 properties that will TOP. Next year, about 12,000 properties that will TOP. This gives us an indication of developers' buying power. So the reason why over last year and this year there were a lot more en blocs was because developers are going to hand over a larger amount of their projects, and when they complete project, it means that they have already completed the projects to hand over to the buyers, and thus they have more sort of bidding power for new land, and they become more hungry to bid for new land. And that's why developers are out for the hunt for GLS as well as en bloc properties over the last 2 years. And thus, when we look at this kind of graph, this gives us an indication of where we are at in terms of season of new launch pricing. So this is currently within the 5 years period that we see the latest new launch pricing. So for OCR, we're already at 1,008 to 2,003. Rest of central region, which is RCR, 22 to 28, and then CCR, we're at 26 to 35. It's very hard for us to go back to the previous season, and this previous season was actually from the year 2016 all the way to 2020, and that has passed already. In fact, last year, we released some episodes saying that some of the balance inventory of those first 5-year season will be cleared out very rapidly in the year 2022. So we actually shared with our audience in August on the go to quickly purchase those units if you are really out for hunt for some of the balanced new launches. Now, interest rate is one of the key things that you need to look on a macro perspective. So when we look at interest rates graphs, we've talked a lot about it in the previous webinar as well. This is basically where we are at in terms of our private property price index as well as the interest rate portion. Similarly, even though this round we had 7 rounds of rate hikes, we are now at about 4% averagely, but our price index is still on an upward movement. That has, of course, spurred even some rounds of cooling measures in the year 2022. And of course, this round, we wouldn't really call this increment in buyer's stamp duty a cooling measure. We'll call it more of like a wealth tax. And our reaction to past recessions as well as this round of pandemic recession is also a little bit different, because this time round, it seems that our pricing has quite a strong momentum spurring from the pandemic kind of induced behaviors in the market, as well as the QE, quantitative easing from the US Fed. So this time around, even though stock market has came down pretty drastically with a correction, but our local price index still increased. And we think one of the core reasons is because we are very cushioned with the 13 to 14 rounds of cooling measures. A lot of people buy with holding power. And it seems that if, let's say, rates were to further come down over the next 3 years, then we might then see a shift in the market to propel towards a more gradual upward momentum again. So one of the reasons why we think that new launches for this year will still have a healthy uptake. Of course, my personal forecast is that for this year in itself, because there are about 47 new launches, the clearance rate will not be as fast as the last 2 years. So this year around, we have 47 new launches, but there are some new launches that is belonging to the larger development size category that will see a lot more popularity and excitement. And of course, later we'll break down into different categories, because there are some launches that are between 300 to 500 units, some launches that are below 300 units, and then of course there are only 7 new launches that are above 500 units. So later we'll categorize them and then we'll discuss them in depth. But one of the reasons why we think that on the Singapore month-to-month basis, there will still be buyers and investors that love new launches because of the nature of the progressive payment element, and this also helps to cushion interest rate shocks. So let's just have a look at this hypothetical example. So for a new development, I think one of the reasons why buyers favor new development sometimes is because a new development enjoys the progressive payment module, especially in a high interest rate environment like now. It gives the buyer a chance to enjoy a cushioning effect over the progressive payment season. So at the start phase, usually your payment is much lower because developer call by phases in terms of your monthly installment. So you might start from a monthly installment of, let's say, $300 to $500, and then it will progress to $800, $1,000, and progressively until TOP. By that time, if really the interest rates were to come down, then naturally speaking, this buyer will have a little bit more advantage because you pay a lower installment amount on a higher interest rate environment now, but you pay a lower installment amount on a lower interest rate environment. So of course, compared to a resale property, you have to take on full hit. But even though when you buy a resale property, sometimes buying, let's say, a property right now, a buyer might think, hey, I'm buying at 4%. But take note that in terms of longevity, because you are taking a 25 to 30 year mortgage, averagely our interest rates will be around the rate of about 2.5%. Because averagely for a Singapore interest rate environment, we hover between 1.2% all the way towards about 5%. So you'll hit the midpoint of about 2.5% over that longevity period based on historical data. So when you go for resale development, my recommendation is that now you should not take a long fixed package. You should go for a 1 year package, I mean, just ensure that whatever package that you're taking is a 1 year lock-in period, because next year you have a chance to do a refinance, and then following year you have a chance to do refinance again. So try not to lock in yourself for 3 years or 2 years. Just go for a 1 year lock-in period when you choose your package. That gives you a little bit more flexibility, even if you were to go for a resale development. And of course, for a resale property, immediately within 12 weeks, you have to assume a 4% interest, and of course, for your next 1 year, your monthly installment will be of the full amount basis. And of course, compared to new development, the reason why a lot of people favor it is because the monthly estimated interest is tapered off, the monthly estimated payment is also tapered off, and of course, if you notice, upon TOP, you are technically not paying the full installment amount compared to a resale property, because for a $1.5 million loan, let's say we are taking an example of this property that is a $2 million property. Sorry, there's a bit of typo here. It's supposed to be $2 million. Sorry about that. So let's say if you buy a $2 million resale property, your full installment is $7,161 per month based on a 4% interest rate. But if you were to go for a new launch development, even if let's say you were to buy back that property at the same price, upon TOP, your monthly installment is only $5,700, because for new launches, you only have to pay your full installment upon CSC. And thus, because of this progressive payment element, you enjoy three things. Number one, your full mortgage commitment only kicks in about 9 to 12 months after TOP, once you hit the CSC stage. So you sort of have like a little bit of like a installment holiday to have a lower amount during the TOP stage. You get to stay in the property for 1 year, but your installment amount is actually 5,000 plus of the $2 million property. And during the construction stage before TOP, as long as your property has not TOP, there's no maintenance fee, there's no MCST, and of course, there's also no property tax payable. So these are the three key things that a lot of new launch buyers are looking at because of the progressive payment element. Now, quiz time. Which is easier in your context? You can key in the comment section down below. Do you think that buying a property and new launch show flat is easier in terms of making a decision versus selling a property in the resale market? So I gave everybody probably about a couple of seconds while I take a sip of the water. And which one do you think is easier? I mean, buying a property, new launch, or selling a property in the resale market? So, now, one thing that we all have to realize is that the new launch property that you buy today becomes a resale property the moment you buy it. So once you buy it, at the very next instance, it becomes a resale property. And why am I sharing with you this? Because people who buy hastily today have a hard time selling in 3 years' time. So take note that once you go into a show flat, you buy today, it's very easy. You just need to put on a 5% check, book the unit, commence your progressive payment, and then, of course, you have to take a loan, sign the S&P, and then your CPF funds has to go in with down payment of 20%. And of course, once it hits the TOP stage, the rest of the payment will kick in. Selling is actually the thing that you have to take note, because in 3 years' time, of course, you might be thinking that, hey, you know, I just want to buy this property and stay in this property forever. Now, based on my 16 years experience, I have not seen a buyer that wants to hold a property forever, because there will always be different seasons of our lives. Sometimes we might want to sell a property because we need to sell a property. Example, your children might change school, you might be posted overseas, you might need to change a property because of financial situation, because of work situation, because of need situation. Maybe you just need more bedrooms, or you need to downsize because you want to change to a retirement and a defensive stage. So having that mindset that you will not sell your property forever is a little bit risky in our context. Based on my experience, I think that it is still safer to have an exit kind of visualization, that there might be a possibility that you might need to exit in 3, 5, 8, 10, 15, 20 years time. And sometimes you might also see a bigger and better property in 3 to 5 years time. And then if you cannot exit your current property in time, you lose that opportunity, because good opportunities don't come often. And thus, if you were to buy hastily, especially if you're hunting for a new launch, it's very easy to buy. But if you don't select carefully, you might face an issue. So people who buy analytically and not emotionally today have actually a fun time selling in 3 years or 5 years' time. Because in 3 years' time, you fulfill your seller stamp duty. If you want to exit, you have that ability and flexibility and ease of exit. And thus, people who buy analytically and not emotionally, they tend to be able to exit faster and easier. They also have enjoyed better offers for their property that they're holding. They are not in a rush state to sell. And with multiple offers, they can then select the best offers that suits their situation. And they can also see appreciation. And they might not need to sell, because when you see appreciation, you can do equity cash out strategy. And I'll share with you a little bit more in the rest of our webinars. So buying a new launch, we also need to look at the macro perspective. Is there an oversupply situation? And if we look at the confirmed and reserved list under GLS, it seems that our government is doing a very good job in controlling the supply in order to overflood the market. Because if our government were to overflood the market, what's going to happen to the existing properties in the entire market is that the entire market might take a hit over the next 3 to 8 years' time, when all these new launches are not being able to be sold in the market, not being able to be absorbed, they become balanced inventory, and then it might create an oversupply situation. But if you look at this on a year-to-year basis, it seems that the amount of land under the confirmed list and reserve list has been pretty consistent. And of course, this is 2023 on the first half. When we complete second half, it should end around the same as the last 2 years. Upcoming residential supply in terms of properties that are going to TOP is also on a tapering basis. So it means that on the previous years, our government has been doing a good job in controlling the government land sale supply. And our unsold inventory is also at a 15-year low. And one of the reasons why we need to bump up the amount of supply of private homes is that last few quarters, developers have been bidding land a little bit more aggressively. That indicates that developers are hungry for land. In terms of government need to release a little bit more land. So last year, we only had 17 launches. And out of which, 1 is landed, 3 are ECs, and of course, 4 stole the show. Piccadilly Grand, Live at MB, Amo Residence, and Lentor Modern. And of course, all these launches have been has done very well over last year. And this year, of course, we have 47 new developments because there are a lot more en blocs for the whole of last year. And thus, all these en blocs are being launched this year. And if we look at some of the projection trending that our research team has, is that this 7 large size launches that is going to be launched in the year 2023 this year will be highly anticipated, because we have broken down the units here, and only 7 launches are above the 500 unit projection mark, which is over at this category. All right, 1 of it is above 1,000 units, and of course this one we think will be very exciting, because with a bigger project size there'll be more volume in place. So naturally speaking, these 7 projects, they have higher volume, bigger land size, more units available, and of course they naturally create a little bit more excitement for home buyers. There are also 8 projects in the 300 to 500 units range that you can take note of. And if we look at all the freehold projects that are launching this year, they're all within the 300 unit size project size mark, and most of them are under the 100 units. And of course, if we look at 16 projects under 100 units, you will then realize that actually this year, even though there are 47 launches, but actually a large quantity of them are actually below the 200 project size category. 11 projects are of mixed use. A large number are in CCR, and that's of course in line with government plan to have a little bit more residential and retail in the CBD area. So project trending number 2 that we think will happen this year is that we think that the 2 bidders will do well. And why is that so? That has to do with the TDSR combination effect that's happened over 2013, 2021, and 2022. In combination, this has of course caused a little bit of shift. And let me jump to this slide first. If you notice, 2013 was this year in between these 2 bar charts. All right. So let me just give a quick illustration, and then hope that you can understand together with me, so that we can then decipher this behavior change, because that would then affect your decision making in what kind of bedroom types to invest if you're hunting for a new launch this year. All right, so bear with me a little bit. So 2013, because of the TDSR implementation, that actually caused a shift in the market. What is this shift? Now, this shift was basically the shift in the size of the units that developers will then create. Now, the rationale is because of the TDSR implementation, the loan quantum that buyers can get shrunk. And because of that loan quantum shrunk effect, developers has to ensure that the type of unit that they produce can go into a quantum play mode that developers must make sure that buyers can purchase over this kind of quantum ranges. So for example, before 2013, you'll get to see 2 bedders in this range. They're about 1,000 square feet. 3 bedders are usually at this range, and 4 bedders are around this range. But after 2013, because of the fact that the loan quantum ability that buyers can take in terms of loan from the banks has shrunk, they have to create smaller units so that the overall price becomes more palatable. So 2 bedders then became 5 to 699 square feet traditionally, and then of course you start to see 2 plus study and some of the compact 3 bedders becoming this range, and the 3-bed premium becoming 900 to 1,000 square feet, 4 bedders becoming 1,002 plus square feet, and of course 4 to 5 bedders around this range. So you start to see that developers then start to create more and more 2 bedders around this range. So you see a higher quantity of 2 bedders, and then you see a lower quantity of 3 bedders. So now when you visit a show flat, you look at the new launches, when you look at the distribution mix, you will start to see that actually developers are creating more and more smaller units because they want to make sure that they can also clear their units to suit buyers' palatable ability. And with that, we think that in 2023, because of the new price range that we are in, and if we look at OCR, for example, averagely at $2,000 per square foot, and you look at a 2-bedder, a 2-bedder will be at about 700 square feet. That will then translate to $1.4 million. A 3-bedder at about 900 to 1,000 square feet will then translate to at least a $2 million. And that will mean that not everybody can afford the $2 million in the RCR region. They might either fall back into a resale market, or they might go for a 2-bedder instead. If not, they might divest all their current properties, or they might combine them to go for a 3-bedder if they can afford at least a $2 million entry price for 3-bed. If not, they might have to go for a 2-bed or 2 plus study instead. So because of this, we think that the 2-bedders will do well in 2023 this year. Now, of course, the other trending coming from this same number 2 trending that we forecast is that 3 to 4 years later, the 3 and 4 bedders might have an easier exit. So from these launches, let's go forward 3 to 4 years later, is that the 3 and 4 bedders might see an easier exit. Now the reason is because of this. In the resale market, a lot of, let's say if you're talking about OCR area, a lot of the buyers, they tend to want to go for at least a 3-bedder or 4-bedder because they have been in the OCR market, whether they're coming from a HDB upgrading kind of a family, or they are coming from a smaller condo family. They might already have 1, 2, or 3 children staying together or together with their parents, and they at least will need a 3 and 4 bedroom. And thus, if you look at demographics and of course other data, we clearly see that in the OCR region, 3 and 4 bedrooms are more popular in the resale market, as well as the new launch market. It's just that now in this new season, new launches is at a new price benchmark already, and thus we think that the 2 bedders will sell out first. But come 2026 and 2027, what is going to happen is that over the next course of 3 to 4 years' time, a lot of the resale properties currently, the owners in the resale properties market will start to ask for higher and higher pricing to match up to this new benchmark pricing. And thus, in 3 to 4 years' time, we might then see resale properties moved up a new kind of tandem, and that might make those launches that are being launched this year seem okay in terms of overall price comparison in 3 to 4 years' time. And thus, the 3 to 4 bedders might then do better and become easier to exit in 3 to 4 years' time. And what we're trying to say is that we're not saying that 2 bedders will be very hard to exit next time. But what I'm trying to share with you is that on a trending basis, we might see 2 bedders clear out in a more popular fashion in the show flat season. But in the TOP season, the 3 and 4 bedders might see more take-up rate in 3 to 4 years' time. And thus, what does it mean for you now? Is that my perspective is that if you have the ability to go for a 3 to 4 bedder, then go for a 3 to 4 bedder. However, if let's say you are a new launch lover, you definitely don't want to buy a resale property because sometimes you just want to buy brand new, you want progressive payment, you want to have 1-year defect warranty from a developer, and you want to buy something that nobody has lived in before. And then you really want to buy a new launch, but you can only afford a 2-bedder, then by all means go ahead for a 2-bedder. But if you can go up to a 3-bidder provided you have done your financial prudency check. Then go for at least a 3-bidder, because my forecast is that in 3 to 4 years time, 3 and 4 bidders will still be easier to exit. Now, this is also in combination with the I only have one chance syndrome, because a lot of couples now have a combined and needs to buy a bigger property because of the increase in stress tests. And over the last 9 years, we have already analysed that smaller properties, they are more like dividend stocks. They are very easy to collect rental and rent out. But because of the size being smaller now at about 600 odd square feet to 700 square feet, when you project it in terms of overall appreciation, it becomes slower. It becomes a lower kind of overall price appreciation. So of course, we see a lot of 2-bidders that are appreciated, but maybe in the range of about 60,000 to 150,000, but after you take into account your buyer stamp duty and interest and stuff like that, you might not see that kind of jump that you want. Bigger properties, they are a little bit more like growth stocks. They tend to have a bigger quantum appreciation because of they're bigger in size. And the next project trending that I want to share with you on a macro basis is that we're going to see around 38 projects plus minus TOP in this year. So what might happen is that, firstly, rental might stabilize in terms of the rental rates in the next 24 months. It might stabilize in the sense that right now rental rates are very, very high. Why will it stabilize is that a lot of the investors that have bought into all these projects, they might rent out their 1 to 2 bidders. A lot of buyers that are currently renting because they are waiting for their 3 or 4 bidder to TOP, they will exit from their current lease and then they will move into all these properties. And thus, this might stabilize the rental market a little bit. So as a landlord now, if you're having a couple of properties, you might want to take note that the rental rates might start to stabilize. I don't think it will drop drastically. I think that it will just taper and come down a little bit, and then it will stabilize over the next 24 months. And then we'll also start to see all these projects that TOP, they will start to ask for a new higher price because they bought into those projects. Let's say in the OCR region, they bought at $1,200 to $1,600. They might start to ask for $1,600 to $1,800 in the resale market. So this is the entire list of the CCR properties that were TOP this year. RCR properties, OCR properties, so a total of 38 projects. And then coming back with this is what I was referring to, because of the fact that they entered at this price. Let's say they bought into an RCR at $1,600 to $2,000, they will definitely ask for at least $1,900 to $2,300, minimum plus $300. That's the usual behavior, because if not, the first-hand owners has no reason to sell. So something to take note of, because that is related to this quiz that we want to do with you. So quiz number 2 is that having this information that I just shared with you on the TOP properties, if you have 3 choices today, which type of condos will you choose? So the first one is that, of course, you can go for a resale market. I have indicated the average transacted price over the past 12 months for you here as a reference. So resale properties in the OCR region, around this, this was the average median that was transacted last year, RCR, CCR. Newly TOP properties this year, the 38 projects, likely you will see their asking price in this range. So basically, I have took this pricing and add $300 here. So likely you will see all these resale properties asking this price. For example, look at Park Esta. Park Esta is an RCR project in D14 beside Eunos MRT station. When it was launched, it was around $1,600 per square foot to $1,700. Now the owners are asking between $2,000 to $2,400 per square foot. So that is an example of what I meant, that the first-time owners have no need to sell back at the same price that they bought. They will naturally ask for plus $300 plus $400 per square foot. So for CCR will be around this range. So these are the newly TOP projects. And of course, the new launches will be at this range. And thus, if you have a choice, which one will you enter into? And I think for the context of today's topic is that maybe you're attending this webinar because you naturally prefer a new launch development compared to a resale project. And thus, if let's say you're somebody, as mentioned, you definitely want to go for a new launch because of progressive payment, you want brand new, you want 1-year defect warranty, then we think that there's a disparity effect that is happening this year. And what is this disparity effect? And this falls under the micro factor segment. And as you can see, we are progressing towards the final segment already. And this disparity effect is between the CCR market and the RCR new launch. Because the gap right now, it seems that it is a little bit close in our opinion. And the RCR new launch pricing is a little bit close to the CCR new launch pricing. So the first takeaway is that because of this gap, and even if we were to compare the 99 years new launches between RCR and CCR, it seems that the gap is actually pretty close. So basically, when we look at this, in conjunction with this, if you are deciding between the RCR new launch and the CCR new launch, you might want to explore more towards the CCR new launch to see whether can you get something in a PSF level that is very close to an RCR range, because that would then make more sense for you as a new launch buyer and a new launch investor. Now, second takeaway is that if, let's say, you are deciding between buying a newly TOP project, you might also want to explore a new launch in the same region, because the asking price by existing owners in the newly TOP project might sometimes crossfire into the new launch price in terms of disparity gap. Of course, it will not be a same pricing. There will definitely be a gap, but if the gap is a little bit too close, then you might want to explore the new launch instead. So this is basically two opinion and projection that you might want to take into consideration, and that is what we call the disparity effect in property Lim Brothers. And we usually want to hunt for this kind of disparity effect, because disparity effect pushes up the next category to a higher tier level. And as we move into the next thing that we want to talk about, before I move into the selection factors, we want to talk about what are some of the most anticipated new launches in the year 2023. So these are some of the anticipated launches that we think might be very popular in this year. And of course, there's one landed, two CCR, a couple of RCRs and OCR. Let's have a quick look. So Poland Collection, it is a 99-year brand new pure landed new launch. So 99 years, pure landed meaning that it's not a cluster house, and very good design based on basically the launch price averagely at around $3.7 million for an inter-terrace, and the build is about 4,000 plus, 5-bed ensuite, comes with lift, and we think that this project is definitely going to do well because the new launch, new projects kind of category has very little supply. Most of the time when you want to buy new landed properties, you have to go into an existing enclave, hunt for projects that so-called boutique developers, they usually buy one and then subdivide, sell into two semi-Ds, or they buy a big bungalow plot or couple of bungalow plots, and then they make into 3 intermediate terrace and then 2 corner terrace. So these are usually how you can acquire newer landed properties. But this is like a one-off launch with 132 units by the developer, and it's the only large-size landed launch in 2023, and we think that it will do well. Lentor Hill Residence, Land Parcel A, we think that this project will also do well, and of course it will be widely anticipated as well. And the core rationale is that this gives buyers a chance actually to enter into one of the lowest land price being bidded. So take note of this launch. And of course, out of the 10 plots in the Lentor transformation, there are only 3 that will be within the 1 kilometers of St. Nick's. And thus, let's move on to D15. Grand Diamond, this is the one that is the only project in this year that's above 1,000 units. So we think that it will be widely anticipated. And in terms of pricing wise and location near to Dakota MRT station within 1 kilometers from Konghua Primary School, the expected launch price based on different profit margin that the developer might want to take, it will be between $2.3 to $2.5 per square foot. And of course, because of the large size, the PSF sometimes can be a little bit widespread between different stacks and layouts. So you might be able to hunt for certain stacks at a good entry price. So do take note of this launch that will happen this year. Jalan Tembusu is also going to be a very exciting plot, and also in D15. And Continuum is a very rare project that we think will also be very exciting. 807 units, one of the largest size freehold development. You might not want to miss this because it's very rare to have a freehold that's this big. And you might really want to take note of this because in terms of the break-even price with the margin price, we think that it's pretty close to some of the 99 years that will be launched this year. So take serious note about this project. I think it will be widely anticipated. And of course, Reserve Residence, a very exciting integrated project. Underpass the Beauty Wall, bus interchange, 700 units. I think it's going to be a very beautiful project as well. Also widely anticipated. And last but not least, CCR, Marina View Residences. Pine Grove, and Pine Grove, a lot of people have been waiting for properties in this area because there's been no new projects that came out over the last like maybe 10 years. and most of the projects are basically the freehold ones that's around this area. So these two land parcels are very exciting as well. And we have a whole list of leasehold OCR new launch being tabulated right here. CCR, RCR, you can access this data basically from our propertybuzz.com/insights. That's our editorial channel. And we showcase a lot of different analysis on the new launches for 2023. So do head over to the Insights channel to have a look at some of these new launches tabulation. Last but not least, towards the last part of today's webinar is to talk about our PLB HAPC mode analysis method. Now, what is this mode analysis HAPC method? Now, allow me to share a little bit with you our mode analysis. Basically, a mode analysis has 10 different points to score every singular condo and apartment in the entire Singapore bandwidth market. So we look at the 10 different factors. We came up with these 10 factors ourselves through our experience, and using data analysis, we live feed the data into our system, and then from here we try to score the projects to have a percentage final score. Of course, every project is very different because there are pros and cons. But with this scoring system, it allows our home buyers and investors to make a better decision. Let's say, for example, if I'm shortlisting about 5 to 8 properties, I want to see these 8 properties in comparison with one another. What are the pros and cons? This allows me to do it at one glance. So HAPC means that we want to use our mode analysis to hunt for projects with a high appreciation potential characteristic. And why do we want to do that? Is because with a high appreciation potential characteristic, that will then allow us an easier chance to exit in future. Now, remember at the start of this webinar, we talked about the fact that if you don't buy hastily, you don't buy emotionally, you analyze, you take effort to analyze before you put down your check on a new launch, this is basically formulating a HAPC for your own property investment, and then that will allow you to have fun selling in future. Because for us at Property Buzz, of course, if you have noticed our channel, we do all types of properties, and later I'll share with you our key perspective in terms of selling properties, because we do not judge the property. We want to help every home seller to exit their property, and our key skill set is that we're able to decipher the pros and cons of every singular home. So sometimes you might have bought into a property with low appreciation potential characteristic because maybe it's a pricing issue, maybe it's a facing issue, it's a layout issue. But when it comes to the resale market and we try to position it, we look at it very, very differently. And later I'll share with you our key perspective when it comes to selling homes for our clients. Now let me showcase this property here at Park Esta. This is an example of a property with HAPC for the buyers that bought during the launch phase. And of course, that has translated to quite a very healthy and decent return on equity for the home purchasers that bought into the launch phase. As you can see, some of their 3 bidders have exited with at least $300,000 to $400,000 quantum gain in terms of appreciation. Sterling Residences was the other one that has done extremely well. Just have a look at the annualized return in terms of the holding period. So most of the home buyers actually held for about 3 to 4 years, but just have a look at the amount of quantum profit that they're seeing on the paper gain. And of course, Panorama is the other one, which has seen an enormous amount of gains over the past years from 2015 to all the way to 2022, and it has performed, of course, exceedingly well. And part of the reason is because it was in the previous 5 years era, and of course, right now, because of the new benchmark pricing, everything has shot up together with the season after the pandemic. Right, and thus, are there any properties that do not do well after 3 to 5 years after launch? Definitely, because remember at the start of the webinar, we talked about the fact that it's not really about new launches or resale. It's really about selecting the properties with high APC. A quick disclaimer is that PLB do not downplay any properties when it comes to helping our home sellers to sell their property in the resale market. Now, the reason is because we believe that all properties have its own set of suitable buyers. Now, a very easy kind of logical perspective is this. If you were to drive around and look at all the properties in Singapore, you look at the resale properties, you hardly find any property that has been vacant since day one. Because we believe that if, let's say for example, today a home seller engaged our team to help them to sell a property, the very act of a home seller approaching us already shows that somebody will like that type of property, because if you look at the property's ownership over the years, naturally when the developer who first owns that property is able to sell in the resale market, that already shows that there is a buyer pool that is liking this particular type of property. So when we look at properties in the resale market, we believe that all properties have its own set of pros and cons, and it will be able to find its suitable buyers. And thus, when it comes to helping our property sellers, we do not cherry pick properties, because we don't say that, hey, this property is low floor, we don't want to undertake. We don't say that this property is facing this direction, we don't want to undertake. And we only take renovated homes, we only take beautiful properties. No, we don't do that. Basically, we do not cherry pick properties. And why am I sharing with you this is because, let me just give you an example of this particular client that approached PLB for advice, for consultation advice. So this client has been holding on to this particular project and owns a unit right there. So basically it's a two-bedder. He bought this in the year 2008 during launch, and just have a look at the price today. Basically, in terms of his entry price to the current valuation price that he can possibly exit today, there was a dip. And this is his current scenario. So basically, this is a question that was posed to me and my team. So the client asked us, Melvin, should I sell my property? He bought this when he was age 30. It was a new development, 2008. And of course, that was right before the Lehman Brothers season. And basically, once he bought it, the market went quiet for a little while. But of course, after Lehman Brothers, the market picked up. But this property was launched before the 2013 TDSR season. So it was a larger kind of two-bedder, and the quantum is a little bit bigger. He bought this new launch, and if he sells today, he will lose $200,000 on paper. We haven't even factored in the buyer stamp duty, the interest he paid over the years and stuff like that. And of course, technically, this is a property for his own stay. He's a professional, his wife is a homemaker, and he asked me, should I sell the property? This was my question to him. So I asked the client, I said that, why do you want to sell the property? And the answer I got back was that he wanted to move to a landed to have more space for his family. He's at a season that he can now afford a landed based on his current professional work. He's doing well. However, he has this dilemma. He was asking me, should I cut my losses and should I wait until my two-bedder appreciate? Because I don't want to tell my friends that my property basically lose $200,000. And I want to wait until it goes back to at least my original entry price. Because, 15 years already, I don't see appreciation, but I don't want to see a loss. So that was his dilemma. So this was my answer to him. I said that basically, because of your plan that you want to move to a bigger property, to a landed property, and if you were to tell me that if your plan was to move to a smaller property because you want to go into a defensive stage, which is a little bit early for him because he's only 45, but if, let's say, he wants to fully pay off a next property and retire, he wants to go into defensive module, then I would suggest that he don't sell and he should wait for the price to recover. But because of the fact that he wanted to move bigger, and he wanted to move from this current two-bedder that has a paper loss of $200,000 because it can only sell at $1.6 million now, because the last few transactions is all between 1.4 plus to 1.5, highest valuation is 1.6. He can only sell at 1.6, and he bought it at 1.8 million. He's waited for 15 years for this two-bedder. And he asked me, he said, Melvin, will my two-bedder go back to 1.8? I said, it might. Maybe when interest rates starts to come down next year and the year after, markets start to pick up a little bit, I say it might go back because your two-bedder is also belonging to a bigger fashion, 1,000 square feet. There was a shift last year because of the higher PSF level right now in the new launch market. Some buyers prefer the older, larger version of the previous era type of layouts, and they want bigger spaces. So I said it might go back to 1.8, but it might take 2 years. Nobody knows because we don't have a crystal ball. But I said, but the landed that actually you're targeting right now might also go up, because take note that the landed that he's trying to buy is on a bigger square footage. When there's a $100 PSF increment, a smaller property and a bigger property, let's say for example, it's 1,000 square feet, this 4,000 square feet, a $100 PSF increment will see 100,000 gain, but a 400,000 gain here. So I said by that time, your landed property might be $5 million and you will lose 500,000. So even if you were to break even here, you lose 500,000 here because you're paying 500,000 more for your landed. If you were to do the swap today, technically speaking, you lose 200,000 on your existing property, but you get to enter at $4.5 million. And of course, this is just a conservative projection. If your two-bedder can go up to 1.8, I believe this can go up much more. I'm just giving a hypothetical projection for him. And basically, if he wants to go for a retirement home, then I would suggest that he don't sell, because the retirement home is of a smaller quantum. He should wait for his current two-bedder to go back to his original pricing, or at least appreciate a little bit more, then he can fully pay off the next home for retirement. So it really depends on your plan. And I just want to share with you some new launches that don't see that kind of uptick graph, because it happens in the market. Because this is a freehold project in Newton. And of course, as you can see, the owners there, of course, they have negative on their paper gain. And of course, these are all transacted. These are 99 years at D19. The first owners that got it in 2016, 2017, they do see a positive paper gain. However, the buyers that bought the balance launches in 2018, they don't see the gain yet. But that does not mean that it will not go up. It might go up. So what we're trying to share is that sometimes these type of projects, they do a U-turn. They do go up, but it takes time. And what we're trying to share is that the context of today's webinar is to try and hunt on characteristics, on HAPC characteristics projects that has a higher probability of seeing that kind of U graph in 3 to 5 or 8 years time, rather than going into properties with LAPC, I mean low appreciation potential characteristics, that has a chance of seeing this kind of downward graph or maybe a plateau graph. So we want to hunt for characteristics with a U-shaped uptick. Now, this is a freehold project in D11. Similarly, it has that kind of flat line that you're looking at here. Of course, owners that cannot wait for the recovery, they want to have a change of plans, like the client that I shared with you, then they will have to take a slight loss as well. Excuse me, so this is a 99 in D23. Similarly, over the past 9 years, it's quite a stagnant and plateau state. And of course, this is a D9 99 years project. So, not all new launches will see appreciation in 3 to 5 years time. Similarly, not all resale properties will see appreciation as well. Some new launches takes longer due to market shifts and policy shifts. However, when let's come back to that. Let's come back to this same scenario. So you might be asking me, hey, Melvin, if somebody buys this two-bedder today from our client, is this buyer buying a lousy property or a bad property? Definitely not. It is because the buyers for this particular two-bedder and the seller for this two-bedder are in different seasons of their life, and they are in different life stages. Let me share with you. So it all depends on your current season in your property journey. You might be a HDB owner that is planning to sell and upgrade. You might be a first-time buyer into a private property market. You might be currently owning a smaller condo, you want to buy a bigger condo. You might be owning a couple of properties, you want to reshuffle, you want to divest your property and then go for a bigger one. And thus, it doesn't mean that the buyer buying this two-bedder today is buying a lousy property. This property might just need more time to do a U-turn. And it just means that the seller of this two-bedder and the buyer of this two-bedder have different perspective, different objectives, and they're in different life stages, because this might be a young couple that can only afford up to $1.6 million, and they don't want to buy a new launch, they want to buy a resale. They don't want to rent for 3 years by paying rental. They don't want to live with parents for 3 years. They just want to buy a resale, renovate, start to build their family, start to have children, and they just want a home. And thus, they might buy this property because they just love the 1,000 square feet two-bedder. And it doesn't mean that they're buying a lousy property. It just means that they're at a different life stage. And this seller might just mean that they are at a different life stage because he is at a stage that he wants to buy a bigger home for his family and his kids. He can afford a landed home. He wants to cut his losses, move to a landed soon, so that he can let the capital work harder for him in the landed property because he has the ability to do so. So what we're trying to say is that it does not mean that properties do not U-turn. Properties do U-turn, but they might take a longer time. And to end off today's webinar, we want to come to the final part, which is how do we select a new development with a high HAPC, High Appreciation Potential Characteristics. So basically, we're at the final stage of the selection factors, and this is our PLB investment methodology because we believe in finding what to invest in every season and buying the correct type of property at a good entry price. And of course, it's always hunt for disparity. And our investment methodology is a combination basically on disparity effect, micro segment targeting strategy, our real estate mood analysis, as well as trifecta. And these are basically the bedrock of how we help our clients and investors to invest in properties. A case study. Sometimes when you select a property so a quick case study is that sometimes if you were to select a property with HAPC, basically, if you look at this buyer that bought into 0725 in 2019, basically after 3 years, this is still one of the balance unit at 0525 that the developer finally get to clear. You can already see the jump in terms of PSF. It's a $600 jump in PSF. And of course, this buyer instantaneously has already seen a paper profit of about 300 over 1,000 on its 2-beta. So mode analysis is one thing that we help our clients to decipher. And of course, volume is extremely important. So this is what we call the volume effect of mode analysis. So when we do a consultation for our clients, we use this as a first approach with all the 10 factors to analyze. And sometimes buyers might ask, does it mean that I should definitely just hunt for a freehold new launch? It must have good schools. You will definitely see appreciation. Unnecessary, because there are a lot of other factors as well. So for example, it doesn't mean that a project in D9, 10, 11, prime district, freehold, within good schools will see appreciation. It really depends on many, many other factors and a combination of factors as well within the mode analysis. Have another case study over here. Let's have a look at these two projects side by side, Sims Urban Overseas and Trade Residences. Basically, this is just to illustrate the volume effect between these two projects. Their land tenure is actually same from 2014, same district. Only difference is that Trade Residence is 250 units, Sims Urban Overseas is 1,000 units. So this is just to illustrate that the more volume there are, volume supersedes valuation growth. So basically, volume sometimes also supersedes the tenure. Some 99s project with high volume supersedes valuation and supersedes appreciation over freehold projects with lower volume. So when you look at this first factor in our PLB mode analysis, volume effect is extremely important. So this is Trade Residences. It's still a very profitable paper gain for the owners right here in Trade Residences basically. However, when you look at Sims Urban Overseas, it's slightly different in terms of the overall quantum gain. Now, one of the core reasons is because the overall volume effect is much stronger in Sims Urban Overseas. And when you compare the two of them, in terms of highest paper gain and the 20th highest paper gain, these are the core difference in terms of the amount of profitable transaction. And this is because of the sure project size, even though they are launched in the same season, same tenure. Second thing to note is that you have to visualize your exit, and you cannot buy based on emotion on the launch day. Because if you do not do that, then your risk increases. So our PLB mode analysis has a couple of factors right here. Basically, to look at exit audience disparity effect. We also look at the quantum effect in order to ascertain whether it's the exit of a safer approach. So this is basically to help us to see this approach is that, it's the same theory, is that it's very easy to buy a product. Let's say today you have $2 million. It's very easy to walk into a show flat and just look at what is available within the $2 million bandwidth. However, you will only know if you have bought a good property 3 to 5 years later when you collect your keys and you decide that you want to sell. And you realize that it's not easy to sell. Only then will you realize that have you gotten yourself a good property, because a good property should be easy to sell. And if you realize that there's a lot of potential objections from the buyers that come and view your place, then you somehow know that when you have purchased it about 3 years back, you should have spent a little bit more time to make a little bit more analysis. So for our work here at PLB, basically when it comes to selling, to us actually selling is a much more difficult job, because selling, it involves a whole team effort. There was one time that we were actually at a client's place to film. A client actually made this comment. He said, "Oh, it took a PLB village to come and prep my home for me." With our home staging team, concierge team, our listing managers were there helping to arrange the stuff and things like that. And then we film, come back to the studio, production team takes over to edit, and then post-production, rendering, visualization, and then digital marketing. Then listing marketing managers have to do viewings, negotiation, closing paperwork, and then admin team, client support team. So it takes an entire village for the selling process. That is why when you go for a new launch kind of project, show flat phase, it's very important that you don't buy hastily, because it's very easy to buy. You just need to bring a check down with you. Make sure that your TDSR is healthy with the bank first, with your IPA. But sometimes just by doing that hastily, it will create you actually exit issues when you want to exit in 3 to 5 years' time. So ask yourself, is there a demand when you want to exit 3 years later or 4 to 5 years later? And who are your buyers that you can exit to? Will the potential buyer next time like the particular property that you're buying today at the new launch? And just to share with you maybe 3 quick factors. Number 1, ask yourself, does your future buyer have a lot of choices to choose from? Firstly, in this project area that you're buying into, all right? Secondly is that you want to look at, are there enough exit audience? Let's say you're buying the OCR project, are there enough HDB upgraders audience with buying power? All right. Third factor is that you want to look at this particular project in this particular district and zoning and area. The potential buyers, are there more of investors or home buyers? So that you will roughly know that, okay, if there's more of home buyers that want to buy for own stay, and if naturally it's in the OCR district with a lot more families, I might want to buy a 3 or 4 bedder at the new launch instead of a 1 to 2 bedder. And buying the correct bedroom type will have different kind of profit range. So this is an example as well that we started at the start of this webinar, is that if you have the ability, the financial ability, prudency to go for a bigger unit, you should go for that, because a bigger unit with a bigger square footage will yield you a higher overall quantum gain compared to a smaller unit at a smaller quantum gain. So provided you have your financial prudency check done. And it's very easy to identify the correct projects if, let's say, you follow some of our PLB core factors to identify the HPAC characteristics. Now, last but not least, sometimes you can buy a great project, but if you enter at the pricing that the market has not adapted yet, you might also see negative figures like this within certain developments. And thus, how do we determine the right pricing? And right pricing is really both an art and a science. It takes experience, but over here at PLB, what we want to do is that we use data, and we make data into a science as well. And using our research plus experience from our consult team, together we want to formulate and minimize the risk of seeing projects on a stagnation level. And of course, we don't want to overpromise in a sense, but we want to work together and do it analytically and with lesser emotion, but really buying something that will create an ease of exit if you want to exit in future. So what I'm trying to say is that more work should be done at the buying phase. And one of the last case study that we want to share with you is that these are 2 quick tips that you can do if you're hunting for a new launch this season. Firstly, compare this particular new launch that you're contemplating to enter to other new launches in a similar region. So if you're going for RCR, look at all the RCR. If you're going for OCR, look at all the OCR launch pricing, or look at the OCR launch pricing within that district. Or if you're going for CCR, compare that to the same district, that D10 or D11 CCR launch pricing for other CCR launches. And just an example of this is that just by doing this comparison, 2 key factors to look at. One thing is to look at the markup in terms of the profit margin that the developer is taking. Now, developer naturally need to have a profit margin. If not, it doesn't make sense for them to conduct this development work. But also one key component is look at the land price that the developer entered into. If you can get a project that the developer has entered into a lower land price, you have a slight advantage there. But sometimes certain developers get into a lower land price, but they will still ask for a higher margin to match up to the market. So it also depends on other factors as well. Secondly is that you can use our PLB Lease Reset Calculator, which I'm going to share with you the QR code in a short moment. Is that when you look at this is basically to reset all the properties back to its 99-year full pricing. So for example, let's say last year you were contemplating whether to buy Amo Residence. One key thing that you can do is that with our calculator for the launches this year, You just need to pump in the figures of AMO residences, and then together with its two strongest competitor nearby, which technically will be Panorama as well as Thomson 3, and look at their tenure, TOP year, and then reset their tenure all back to 99 years, and add in like a small little rental cost. And then with that, look at their final PSF on the reset level. So basically, if we reset them all to 99 years without rental costs, actually you can see that they are quite close to one another. That gives you a safety indication that actually you can go for AMO residences because it's actually very close to the other two resale properties. And this will be the freebie that we'll give out to you later on. Last but not least, it's very critical to purchase the right unit. And how do you do that is that sometimes you need to understand in terms of certain facings, as well as price premium, is the developer structuring this to an advantage that you can take advantage of in terms of disparity effect. Because sometimes when you look at certain facing, a certain view, you need to anticipate 3 years later when you sell this, will there be any objections for the future buyers that is going to look at your unit? And with the price premium that you're paying, is it worth to go for a better view or should you stick to a lower quantum? So this is something that our PLB New Launch Consult team is very good at helping our investors and buyers to decipher, to look at a specific unit type, facing and stack facing to go for when you're in the final selection phase. And we help our clients to identify based on disparity of pricing, facing, floor level, layout, and make sure that there's no major objection in future. And this is our PLB Consults team. And last but not least, a quick case study was that this is a client that we helped his family to exit from their already profitable 4-room flat at Duxton Pinnacle and successfully helped them to invest in new launch development as Sterling residences. Of course, what we do on a comprehensive level is that we look at basically their transition timeline from their current place to their new place, and what should they do in the interim. We also do sustainability and affordability tests on their financials, and as well as checking their loan eligibility with our partners. In principle, approval has to be done beforehand. And of course, we do all these sorts of tests just to make sure that it is a very comfortable investment and sustainable over at least 8 to 10 years period for the family. And of course, after going through the PLB Consult with our team, this client invested successfully into Sterling residences to help them secure a unit right there. Of course, the last transacted, they already see more than $400 to $500 PSF gain in their current property that they're holding. So our methodology basically is not just on analysis, numbers, facts, methodology, it's also built on relationships. And just to share with you a quick... Yeah, so if you've not seen this video, it's on our YouTube channel. Basically, we interview our clients and then ask their opinions on our marketing strategy for their home. Do head on to our channel to check in a lot of all these chit-chat sessions that we have for our clients, just to understand a little bit about how our team work with our clients. And we love to build relationships with people. And our methodology is definitely not to market hastily and also not to buy hastily, and always to take analysis and numbers in a very high regard. When it comes to marketing our homes, we think that the old passive method will not have longevity, and also the one-man show agency model, we think that there could be a better way to help our clients from a customer's reverse engineer perspective. And we think that having a team, it creates more attention for our clients and more attention to details when it comes to marketing and positioning their home to have a better potential for exit, speed of exit, as well as more premiumness in exit. So on top of having a good creative content campaign, our execution is also at a very high level because back our inside sales team, we have 57 full-time consultants that are on a full-time basis helping our clients on a day-to-day basis. And these are some of our signature strategies that we'll share with you over the next course of webinars throughout the entire 2023. So we still have a totality of 21 webinars and seminars to go. And we'll also share with you more in depth on how to utilize our mode analysis. And of course, this will be gone. And of course, this too, we go through with our clients on our consult 1-to-1 back in our PLB HQ office. And if you're interested in landed properties, this is going to be one of the key webinars that we'll talk about in March as well, where we help our clients to decipher whether should you go for A&A, new, landed, or should you rebuild. We'll see you on the next one.